15 years ago, here in the city of Kigali, right in the heart of the city of Kigali, the Rwanda Stock Exchange was registered, established, and it began operations. 5 years before, earlier, there was soul searching. Government had created the capital market industry. So regulation, politics, and policies around made the Rwanda Stock Exchange a fruitful achievement. 15 years today, in this building where we are about to go and get the real story, over $17 billion have been traded, and about $20 billion has circulated in the Rwandan economy, right from this building. Follow me, we go get the story from the horse's mouth. So, Mr. CEO, you are celebrating 15 years of existence. And it's one of those transformational stories in the country. Yes. Take us through how you started before we go into the details.
Oh, okay. 15 years we are celebrating this year. There are 15 years as RSC from the start of our operations officially as a fully fledged stock exchange. But in a sense, actually, the company itself to create the stock exchange was registered in the books or the registrar of companies in Rwanda in 2005. So basically, it's 20 years of existence of the company. Of course, we kept it in a shelf, waiting for proper implementation of and capitalization of the business in the beginning, which happened in 2010, and we launched officially with operations and listings of local companies. We had the first IPO. Matter of fact, the first day we launched officially the RSC, and as a fully fledged stock exchange, that is 31st of January 2011. So so that's what transpired at the time. But it was raised, the company basically and the market was created for two things with main objectives. The first one is to be a platform for raising long-term financing for the economy. The second, of course, objective is to run as a company because, you have to pay rent, so any company has to find means to survive. So I was capitalized around 2011, and the shareholding went 60% went to the stockbrokers and 20% government through the Ministry of Finance. Currently is Agaciro, which is holding the shares on behalf of the government. And then there is the institutional investors, banks, insurance companies, and the social security. They hold the remaining 20%. So now,
so when you began, how many people were you?
As a company,
yes,
or cooperating.
What was the size of the team?
I can't even remember. The size of the team was 5. The size of the team was about 4. We had like 2 full-time employees and an intern, I think. So so we started.
And you have grown to?
Now we have grown to, this year we have now hired 60% of our workforce now is brand new and young and energetic. So we have about we have a group of 16. We've been running the company for all these years, mainly, the highest number we've ever had was like 7 until December of this year, when we hired new staff who are currently about 16. Then we also have support staff, of course, which are not necessarily part of our structure. So it makes about 20 if you add the support staff, cleaners, and stuff like that. So, yeah.
Interesting. So we have now two phases. You're running a market or a platform where all transaction, all trading is taking place, but you're also running a company as well.
Yes.
So tell us how you began. How much did you invest? The investors, how much did they put in, and what's the value of the company now? And then you tell us what has been traded in terms of volume and in terms of cash that has gone through the market.
Well, I think, as a company, it's a private company, so I don't have to disclose, but we are public utility. What the information is on our website about how the company is and valuation, not valuations, actually. You can see our business plans, our annual reports are there since inception up to now. It's really available on the website. We are required as a public utility kind of company, and also for transparency purposes, we have that there. But we really fairly started modestly, and the company has grown over the years. So in terms of money being of our revenues and profitability, we are very profitable now, self-sustaining. In the beginning, we had some support from the government through the Capital Markets Authority, a few years, 1 or 2, 3 years like that in the beginning. Fairly modest, but eventually we had to create our own ways or means of surviving as an institution. So it has happened. So now I would say we are out of the value of death. So we are no longer a young and small company starting. Actually, now we have grown quite a bit and in all size. So, but in terms of the company as a marketplace, we started with a few companies, 1, 2 listings when we were launching the market officially, because we had some cross listings from the region, 2 of them, I believe, and a few bonds. But now we have grown up to a market capitalization of around $4.6 billion, of which about $3.3 billion is equities, that is the shares of the companies listed, and 1.3 again is the fixed income that is listed on the market. So if you look at the money raised so far since inception in 2011, like that, it goes around $1.8 billion, which makes it around 13% of GDP, of the current gross domestic product. But between that and the money traded, the now money circulated in the secondary market, if you add all that up, it sums it to around $20 billion. So that makes it around 42% of GDP on the money that has circulated in the market. So I think through your hands, it's through the platform where we are today. I think it's quite some progress, but there is a lot more to do.
What about the volume of trade?
The volumes of traded I've just mentioned, it's about $17 billion so far through the equities, the non-regular bonds, and also the repo markets, which is done over the counter for in the market. Actually, the fixed income makes the bulk of the trading on the secondary market here so far.
If I wanted to see what all this money that has been mobilized and circulated, what would be the best way to see the impact of?
Okay, but between 149, actually we are closing in. I think next week we are listing another bond. It's about 150. We make it 150 instruments that have been listed in this market so far. Currently, outstanding, we have about 110, 120 almost listed securities now outstanding. In total, it's by next week it's going to be 150. We're closing in on that because so far it has been 149 securities listed in the market, which makes it up through what I was just mentioning above. Measuring impact is you look at, if you look at money raised and transactions that take place, there's no transaction that takes place for free. That's number one. So that there is income coming through intermediaries to come into the stock exchange, the compensation fund, the regulator, all that, but it's not that much of that.
And the
But the most important, and investors, of course. But the most important is what the money raised is going to do. How much employment has it created? So now if you look at the companies that were listed in the market, it's the creme de la creme of Rwanda. You see the banks, the breweries, telecom companies. And then on top of that, you have fixed income from government, but also from some private players. Of recent, now we even have SMEs coming in the market. Food, our investment clinic project. So the impact really goes beyond the fundraising itself, because it's not an end in itself. It's what the money is going to do. It goes into those companies. If it's Bank of Kigali, the company, when they come to the market, it was valued around $87 million at the time. Balance sheet of funds and management was around $450 million, around there, $400 million. Today, the company has expanded, has grown, has even gone beyond the borders. They have a branch in Nairobi, for example. In some other countries, they are funding some sort of
$1 billion.
So now they have over $1 billion plus dollars in funds under management as Bank of Kigali, and the company is valued. If you look at the value today in the market, or the book value, it's fluctuates around 315, 400 plus. So that's a company that has grown already. That one alone. I mean, I'm not going to Brazil. I'm not going to the other ones that have come to the market, and what the funds they raised have done. Maybe I would say the dividends they have given to the public. It's a note of $400 billion Rwanda francs. That is dividends in the cash money distributed to shareholders. So I think that those are the kinds of value. When you get a dividend, what do you do with it? You invest it.
What about government?
Government, of course, has benefited in threefold, I may say. The first one is, as a government, one of the objectives of government, rather of the duties, is to raise funding, long-term funding for the country. I will give you a very good example. In the beginning, we had to set the pace for development of the capital market or pricing of money. That means the yield curve had to be built. So now government paper goes up to 20 years. For monetary policy purposes, they are complying with international best practice and standards. We are complying with the regional integration matters because we aspire to have a regional common currency. The monetary union in East Africa, for example, that's one thing that has been done in that. So the savings also through the general public, it's another one. Then also they're raising some funds as part of our domestic resource mobilization. It's very, very important. Domestic resource mobilization for growth is not only the taxes. I know people think domestic mobilization is the taxes into the economy, but the savings also are reinvested in the same economy, same balance sheet of the same economy. So it has happened. So when I say all that money has been raised, the 1.8 something that has been raised, most of it, the bulk of it actually is through the government bonds. Because every year now, the government also sets aside some portion of domestic resource mobilization through issuing government bonds.
And the behavior of all bonds that have been listed, you could sense that they've been oversubscribed and they are all above 10% interest rate.
In this market, actually anything that has ever come, it gets oversubscribed. So whether it's bonds or shares, anything that comes in primary market, because there isn't really that many products on the market, people have
so anything that
they have appetite for that.
Grabbed.
Everything that comes is grabbed. Yeah.
What does that tell you as someone who is running the stock exchange?
Well, that tells me that there is more to do. We have to bring in more products on the market. We have to be more innovative, probably, so that we create more products and participants in the market and increase the skill set of people who are going to be dealing with that. But so that says when you see an economy growing like this, that means there is opportunity of investing, and investing means saving first of all. Then you find something to invest. So I think as market players, we have to work very hard to get more and more companies listed across the market sections, actually across the economy, because our economy is the bulk is SMEs. Let's face it, and then not even SMEs, 80% at least is SMEs in this market, like any other countries in Africa. And SMEs, they employ a lot of people, they create employment, they pay taxes, they grow, they have more potential to grow than bigger companies most of the time. So because they still have room for that. And graduates of universities nowadays, most of them are not looking for jobs. They are looking for what? Entrepreneurship. So what do we do for those people? So I think the opportunity in the economy and for both the entrepreneurs out there and the investors out there and the savers that we know, whether it's retail or institutional, they have a big role to play. And of course, as market players, we have set the tone in terms of legal framework and infrastructure to use. And it's all best practice or best standard internationally for what I can say. Yes, this place doesn't close. They open the
24 hours.
Almost 24 hours. Yeah, of course not 24 hours. Kigali is
But
not
it's
24
busy.
hours as such, but it's very busy until late. I was surprised around on New Year's Eve this year. I left the office around 11 p.m. and people were still that many and making noise. Still trading and people walking around and all that. So that it's a marketplace. It's a bustling. I think small traders, hustlers, people hustling in their daily lives. Yeah.
Some of these people I see on the streets could be investors,
of course,
individual investors.
Of course. Because what I see here, each one of them has a phone, right? And that phone has a Momo account, most likely. So if you look at the millions of Momo accounts that we have in Kigali, you can tell that there is a lot of potential for people to turn this into savings opportunities using the usual means they are used to.
So what is this?
I mean, this is downtown. It's another,
The tax park.
building where people.
So it's a multi-purpose building.
It's a multi-purpose building, but there's also a taxi park nearby. See, that's the financial district. No, sorry, the business district continuing. And you can see around here people looking to make their living on a daily basis. So all this was not there when we were starting the market, by the way.
There was nothing here.
No, there was a prison below, and there was also a police station, I think, somewhere around here. Now it's a full continuation of the business district. Or they took at say Mateus again. So what I can tell is that on this district, there are so many others actually. Some business districts in Kigali now. Mirambo can be one of them. You can see the Mera area, Chimirongo, all those places are different pockets where you see people busy. So when I see those people, I see potential. I see savings.
That's the National Institute of Statistics
Yes,
of
that's what
Rwanda.
it is. Yes.
How much do you use their data?
Oh, you can't do a stock market without data. So we use their data
So
all the time.
whatever work they do there is
Oh,
useful.
definitely. Yes. This is chic. It's another correct investment scheme that was put in place by a few.
How come they haven't
businessmen.
listed?
Well, good question. We have been there for a long time without the instruments for them to allow them to list in that way. Because you see, typically, properties like these.
Oh, this company here. up there.
Yes,
Africa Medical
Supply. Yes,
is one of
they came from our investment clinic and raised 5 billion Rwanda francs recently.
5 billion.
Yes, last year actually.
Was it?
That
was a bond.
Yeah, they did a bond. Yes,
and it was oversubscribed.
And it was oversubscribed, and they are going on with their business. So that's one of the products that came.
That's an SME.
Yeah, it was an SME. Still as an SME, considered as an SME. And you see, the whole purpose of this, the market, is exactly that. It's a business owner who is looking for financing for their business so that they can produce more goods and services, and they pay taxes and employ people. And that's the contribution of the capital markets. Actually, if you raise money through the capital market, all these construction happening, I see them as potential real estate investment trust eventually, because those are some of the products that come to the market. So you asked me why places like Chic, for example, has not listed. Previously, there wasn't any instrument to support that as such, except maybe issuing a bond or just going to the bank. What they did, they went to the bank. Do you have the instruments now? Monies. Yes, last year we published, actually we launched our real estate investment trust platform and ETFs. So that's exchange traded funds. So that means actually the instruments to support growth or real estate projects is there. Yeah. So soon enough, you don't be surprised to hear a product coming from that side, because you see a lot of people build with bank money, but now there's also condominium law which allows people to buy even shares in buildings, and so it's possible with all this stuff happening. Yeah.
Have you engaged Teklai?
Well, due to security purposes and professional and confidentiality,
you are not mentioning
of our profession,
you have nothing.
I reserve my First Amendment. You know,
you are saying nothing about it.
I say nothing about it.
Interesting.
I'm not supposed to do that.
But
you know, all these are businesses which have the potential, including Simba. You know, as a supermarket.
turakorera ruguru.
Turakorera ruguru, sinshaka kujya muri gahunda, ntabwo ndi muri filime. Don't want to go to
ruguru hariya iruhande rwa mujyi wa Kigali. Ubumwe Hotel.
Yeah, it's another hotel belonging to a city tycoon and
Equity Bank.
They are having twin towers, talking of which, the Kigali Business District. This is also a property owner. They have many properties, and that's Ministry of Finance.
And these are your bosses?
Of course, yes. Ministry of Finance is the anchor ministry for anything that has to do with our economy. So, yeah.
This is like the center of
this is
Rwanda's
actually the new the financial district actually here. That's what, you know, as we are aspiring to be an international financial center. And
on this side,
the I&M Bank,
and then the city of Kigali.
Yeah, all that.
Literally here we are in the center of the financial sector, the business.
That's the financial sector. When you see all that, the I&M Bank and these other guys, you see they have raised money in the market. And Equity Bank is also a listed company here.
So twin towers here.
The twin towers, you can see them. Yeah, and now the Ministry of Finance. So you can see all this. You know, these are infrastructure projects. You know, that are, you know, helping build the economy. That's very, very important in terms of fundraising and raising capital for the long term whole. So yeah, so
your success was cooked from here.
Of course, I mean, the Ministry of Finance is the one that thought about you know, the possibility of raising long-term finance for the country using the capital markets, basically. So I think that's how the idea came in around 2003, 4, like that. Feasibilities were done, and indeed we realized that the country growing like that needs a long-term financing for the economy. So now it's another alternative source of financing as opposed to the traditional banking mechanism. So
So when we walk on the streets here, you see the results of what happens on your trading floor.
Sure, yes. I mean, it's an indicator, one of the indicators. When you see a bustling city like this, definitely the underlying securities
I can see
being sold and done. Yeah.
Bank of Kigali, I&M.
Yes.
BPR is on the other side.
Sure. Yeah.
KCB, right?
Yeah.
Equity
all the
banks.
Yeah.
Interesting.
Yeah. The cement, all these people, you know, that mainly this one is the financial district. Yeah.
So at the time of the establishment of the Rwanda Stock Exchange, until now, what do you see here?
Well, I mean, you have to remember the main, I mean, the thought, you know, came all the way from around 2005. That's when the government approved the project of creating a capital market. You know, those days you used to see EcoBank and you think it's a big building, right? But now you see all these whole districts. BRD is looking like a small baby, you know, and look at these high rises that are coming up. And hotels, banks, and other office blocks are being developed, not only on this street, actually. It's the whole city. So, you know, we've been part of the whole journey of reforming the economy and the financial sector, and you know, sometimes double-digit growth in the economy. But all in all, you know, everything gets accumulated together. You know, so it comes adds on.
The Development Bank of
That's
Rwanda.
the Development Bank of Rwanda.
There's an insurance company.
You see all these buildings here.
There's also an insurance company.
Yeah. So so that's a sign of growth, and you can see others that are going to come up, office blocks and hotels and so on. So I think it's a sign of growth in the economy, and the market also has been growing ever since. You know, so in products and number of investors, awareness, professionals. Now that we even have Kigali International Financial Center.
How much thirst is there for raising capital on the stock exchange through capital markets?
I mean, you know,
generally
the awareness is not really that much, or the knowledge mainly. Financial literacy is not really all that within the for business community. Yeah. But it's increasing ever since we started the investment clinic project. We are seeing signs of people having more interest because they have seen some of the small medium enterprise companies raising the money, and they said, you know, they are now inquiring. So we are now at the fourth cohort of companies. But again, in the capital market, it's not about the numbers. It's about the quality of companies that show up. Because remember, at the end of the day, it's public money that we are using. So we have to be careful on who we approach and who we let pass through. So within the investment clinic, we try to clean up companies to get them to be investor ready.
Do they volunteer or you go after them?
Before we used to.
Do they show up? Do they sign up?
Announcements. But nowadays we are using both. We do the announcements, but we also go to door, and we try to bring them on so that we can be able to support them in their activities.
And out of from the investment clinic, have you successfully gotten some companies to benefit from?
Yeah, definitely. I mean, we started the clinic around 2020 as a pilot project for 2 cohorts. First cohort, we got 45 companies to participate. 12 made it to the finish line. Only 3 were profiled in the first cohort of companies. Then we went on around 2022. We did another cohort, the second cohort, again also part of the clinic. Part of the pilot phase, where we targeted 10 companies. only I think three companies were profiled. So far, we've done those. We are doing the third cohort and the fourth cohort, and altogether, so far we've had 6 companies profiled. They are on our next gen special board of the RSC for unquoted securities, and they are listed there as private entities, but who are aspiring to do public offerings at one point.
When you look at
2 of them, actually, of the 6 that on the investment clinic, on the special board, of the RSC, that for unquoted securities, 2 of them. Two of them are not. They are sorry. 4 of them have raised money already for long term. They all did bonds. One of them did even a corporate bond. No, sorry.
That's who and
did,
who.
We have Energy Hotel that has raised money, 5 billion, I think.
5 billion.
5, yeah, out of the 6.5 they were looking for. In 2 tranches, we had Maui Grain Millers, which did 2 tranches also.
Yeah.
And they raised 5 billion already. We have Africa Medical Supply, which has also raised 5 billion. And we have Prime Energy, which has raised 9.5 billion.
There are some companies, startups here that might end up benefiting.
That's
right?
no skin.
That's no skin.
Yeah, that's a place here for.
That's an ecosystem that may end up bringing you some SMEs.
Yeah, eventually, yeah, because we were in constant communication with them, and we participate in the same fora from time to time
to see whether there is
see where we have synergies and potential.
Do you treat IT companies or companies in the technology area the same way with other sectors?
Yes.
They have the same benchmarks?
Yes.
For listing?
Yeah.
There are no adjustments when it comes to tech?
No, there are no adjustments. You see, companies are companies, and governance is governance, accountability is accountability, and financial management is financial management. So then now, because we are dealing with public risks and you are using public money, you must be careful who you are approaching, and all that must be a standardized kind of process.
So you, in terms of eligibility, let's say 5 years of operation, 3 years of operation, do you treat all companies the same?
Well, I mean, there are instances where we could have waivers here and there, but the standard procedure is, or the 3 cardinal rules that we go by is, first of all, is good governance, good corporate governance, that is. Okay. The second one is accountability, meaning good financial management of the company. And third is profitability. So all companies that raise public money must be profitable. If you're not profitable, we can always look at it case by case. So if you do case by case, you must prove, or you must show in your numbers that, okay, well, I'm trying to raise X amount of money. If I raise this money, despite the fact that I'm not profitable, or one of the years they will require has a problem, but by us raising money, we can demonstrate that we will make it. We'll be profitable.
This is the central bank?
Yes.
The National Bank of Rwanda?
Yeah.
I'll be having an interview with the governor later, either between today and tomorrow or next week.
Okay.
What role does the central bank play in your...
Well, central bank plays a very central role in the development of capital markets, because they are the ones in charge of capital market development, um, and monetary policy. And they are a key partner in whatever we do. So they are the ones who manage currency, and the trading is done in currency, either the local currency, which is Rwanda currency,
or hard currency.
So central bank plays a big role, but we do a lot of consultations about government issuance. They're the government bank.
This is very beautiful.
Yes, it's a green, yeah, and so by being that as the entity in charge of monetary policy in the country and financial and the currency management, we work with them very closely.
They are basically putting a torch on you every day.
Of course, every day, yeah. Of course, they are the issue on behalf of government. That means all the transactions we do with government bonds, definitely they are the ones involved directly more than anybody else. Yeah.
So you were telling me how the instrument that was accessed by government to put together something like this, in the coming years, we may end up having, actually, we will possibly, the sooner the better.
Well, I can't speak for government, that's one for sure. But
I mean the stock exchange to have such a or similar instruments.
You call it an instrument and hard currency. Hard currency instruments is definitely that one can guarantee you they will be there for sure. But what I can say is that for as far as like sovereigns are concerned, normally they are done in the markets because you want to attract people from outside. The vast investors, the vast pool of investors, like in Europe or America or the Middle East. So those ones happen typically in Europe. That's how they call them Euro bonds. They started being issued in the Europe a long time ago, and now also some African sovereign countries are doing that. But what I have not seen much is about them when maybe they are get cross-listed or they are dual listed in the different countries. But it's possible, if someone wants to do that. So, but for us here right now, our aim is to allow this economy or people in the region, because we are now an international financial center, to allow companies and instrument and projects and even governments, if possible, to consider our platform the same way people consider Mauritius. Mauritius companies, most of them are not from Mauritius. You understand? So they raise money in Mauritius. So you create vehicles, you create companies, international investment companies or funds to invest in the economy locally, or to deploy the funds elsewhere. So right now, I think we have created the environment for that, for all those instruments, and I think the market players, they have to grab the opportunity. Entrepreneurs, business owners, and financial market experts and service providers, it's up to them to now take advantage of whatever is already available. I have to remind that to remind you that whatever we have now is international best practice and standards. Whether we are talking about sustainability linked bonds, we are talking about our green finance, we even have a roadmap as a country. We have a taxonomy already has been put in place in Rwanda.
You're saying the Rwanda Stock Exchange and the New York Stock Exchange, for example, you are operating at the same capacity, same technology?
Well, yeah, what I would say, the platforms are the same because the rules are almost the same everywhere. If you talk about IFRS 9, same everywhere you go. You talk ISSB, talk about sustainability. We are members of the World Federation of Exchanges. Okay, we are members of the the UN's Sustainable Stock Exchanges Initiative under the UN Compact. We are members of the African Securities Exchange Association. We are members of IOSCO, as our Capital Markets Authority has already been given the status for that. So all those international fora that we belong to, even regionally, we are members of EASEA. That's East African Securities Exchange Association.
Of which you
we are members. And the regulators, also the CMA is a member the CMA is also a member of EASRA, which is a regional body for securities exchanges. So that means, at every step, talking of economic diplomacy and cooperation, we are there. We are already there. So that means, we have signed different MOUs with different institutions across the globe. We are working with the African
You were
Development
in
Bank, for example.
Jamaica last week,
Yes, we
2
concluded
weeks ago.
an MOU with Jamaica Stock Exchange, which is a very good example for African markets.
How many other
Same
countries?
size, many different markets. We have one with the Nairobi Securities Exchange. We have one with Luxembourg Stock Exchange to look at for green finance and products, and with so many others that we, in our strategic plans of the stock exchange, we have that aim of also contributing to the economic diplomacy of the country. So at the end of the day, our job is to make sure that we are at the center, or we move our needle for building this country. It's all about the country, not even the stock exchange. How we develop, and we put our energy together with other people, intermediaries, the regulators, policymakers, government officials, and at large entrepreneurs that we serve, and also savers out there that we need to promote going forward into the future. So I think the next, we finished 15 years, but the next 15 years, definitely I can see a good future and an accelerated growth in the market. But we must do it together, not me and us alone as a stock exchange.
You are not a foreigner, so my next question is a bit political. Yes, you're a businessman, but you understand the politics of this country.
Yeah.
When you look at the politics, the ecosystem, the environment, the policy framework, what are the key points that have facilitated the success story 15 years now?
I think the key points was, a vision and an implementation plan. As you remember, I said earlier or different times, the market was created to participate or to contribute to the long-term financing of the economy. And that was part of the whole vision of Rwanda becoming independent in terms of finances, the resource mobilization and financing our own economy. You can't rely on outsiders all the time. You have to create your own well-being. So that one, after finding out it was necessary, things happened. Implementation plan was put there. We did a plan for 10 years originally to create a capital market in general, which was meant to be reviewed after 10 years, which we did. Actually, we went everything according to plan, and we achieved it. Apart from maybe some products that did not materialize, like equities, these things, and IPOs are very scarce in our markets, not only in Rwanda, by the way, but also in the region. Privatization maybe did not come through the way we expected. Private sector is only catching up now, but all other pillars, we developed them. The first one was to develop a yield curve. Second one was to develop to do privatization, list companies from maybe privatization. And then the third one was create institutions to support the market. Fourth, approaching the real private sector now to look at considering using the capital markets. And the fifth was regional integration. We have accomplished all that now. But of course, we need to accelerate where we are today. So now what made it possible? It was a proper planning. The 10-year plan ended. We put up a new capital market master plan to bring the market to another level. So we've started implementation around 2018. And it's supposed to end in 2028. But we have already started thinking about the other one, another one to replace this one, So now as a stock exchange, we are running a business plan for 5 years, which we have just now started the second year, 25-29, which we'll see now us transitioning to the new heights now. So we've grown, we've passed through the variable growth.
Yeah.
Now the trajectory must be even faster, because if the NST2, we must contribute, we must be at par, or we even have, if possible, we can even go be ahead of the NST2 in terms of contribution, if possible. Yeah.
I don't think this whole beautiful story was achieved without ups and downs and obstacles. You've been there 15 years.
Yeah.
Tell us some of the the knuckles that you got.
Well, you can't, of course, talk about
the blocks, the pressure points.
Yeah, definitely. I mean, when you have a journey like this, you can't talk about only good stuff. You know,
Yeah.
it's not a walk in the park. You know, developing a market in a place where people only know the cows, you know, it's a problem in terms of ownership. People want to touch their assets, but we are talking to them about shares and bonds. What do you expect? They say, I see my cow. Where is the share? It's intangible. So now you go and on the other side, you talk to the supply side. You talk
You can't
to,
convince
to a
them the
business
cow will die
owner.
tomorrow.
Yeah, so you cannot promise the cow. You with the cow, you can see it, but shares you can't see them. Now so that's the side of the investor, would be investor. That is a saver out there who will choose between buying land or building a house or buying his cow and buying intangible things. Those are shares they are talking about. Or buying bonds. What is a bond? You know, so that's very difficult alone to convince someone to take their money and entrust it with you. You understand? I mean, people have been swindled before. So they know, oh, by the way, there are a lot of crooks in town. There have been pyramid schemes in town. So now what is telling me that, I mean, the time we were developing, it was the
there's a
time.
difference between
Exactly.
a pyramid scheme, a Ponzi scheme, and
So for a common Mwananchi, it does not happen that way. They think
I
about
see.
otherwise. You see, so the money
You
you
had
earn
a
it
lot
very
of
hard.
problem with this,
It's a
right?
problem like that. You see, financial literacy is one, but also the resistance. I mean, now I'm talking about the demand side. Now, if you go to the supply side, what happens?
Same.
You know, same happens. You know, you tell someone, come bring
They're
your
afraid
shares in the
to-
market. We want to raise money for you, but they are only used to the Bank of Kigali or Bank Populaire. So they say, I'll go to my bank, they give me my loan. Why do you want to bring me that intangible thing called loan? Bond. You know, bond government, so the literacy was very important to get it to sink into people's heads. But also resistance comes from the instinct, you know, it's you are born with it, that kind of instinct. Of
Being
saying you have
resistant.
resistance
And fear.
and the fear of the unknown or the fear of being taken over. You know, so it happens in your own business. Imagine you create your own business. Now they tell you, oh, you are going to have neighbors who will be your shareholders.
On a 1 to 10
You don't want
basis, where are
anybody to
you
own
now?
your business. In our culture, you know, we are not used to taking the whole truth. You know, so you ask someone
You
where
have
you going,
100K
say, oh,
here.
by the way, I don't know where
It's
I'm
like,
going.
no, I
Yeah.
have 5.
So now imagine you want to open capital market requires you to open
Where
your
there's
books
binoculars
where
in your-
everyone will
in
be
your
looking at you.
finances.
What happens in that situation? So that's one of the
On a scale
things.
of 1 to 10,
Yeah.
where are you now when it comes to public awareness on this financial literacy?
I would say we are on the scale to 10. At least I could tell you every village, every district, or I would say we have done all Mirenge. People know capital market exists. At least that what they have had it. They know you can buy shares because they belong to Ibimina before. So that you buy shares or you get together for collective
So it's
investment.
not a new thing now.
It's not a new thing anymore. However,
Decision making.
yeah, it's a trend that has to continue. But at least that education is there to say to, you know, because you know we've had those other instruments or other institutions I mentioned earlier as pillar number 3 in the development or planning to develop a capital market. It was institutions that were meant to support the development. That is fund management, that is a commodities market, that is now as Agachiro is there, for example. We have Aranite, we have Ejoheza pension scheme that is actually sinking in people's minds. In Ejoheza alone, people are about maybe 4 million people. That is already there. They know they have investments for their future pension. So that it's not where we used to be. You look at Aranite today, they are managing around, right now, funds management is about almost 90 billion right now. I'm not saying money that people redeem every week or every year. So we are talking about 86 or 89 billion Rwanda francs, but in 1 year particularly, people can redeem more than 30 billion. You understand? So if they kept it there, then that money will not be 90 billion. It would be what? 130 or 140, 50.
And it
So
can
that
be
means,
invested,
so
yes.
now that means people, the culture they have started to know now. Now, but we need now to bring more products on the market. We need to improve our technology.
So there is enough, so that there is enough liquidity.
People should be able to access their instruments via the phones. We are working on it with the central bank and telecommunication companies. So that one is coming, so that people will be used to using their phones the same way they gamble. So it's $1 million question for me if I would be able to get all these people who are doing gaming every day, you know, to also do gaming. Every time they go for gaming, there's something they are doing on the market. You know, maybe buying a share or a unit of something. That savings for their future Gambling is not really something that makes you rich.
In brief,
but,
you are looking for more liquidity on
more
the market.
liquidity
Yeah.
in the market. Fixed income is no problem. We have a lot of liquidity.
You
there.
just need
Equities, we need more companies. So when it's a chicken and egg. If you don't have instruments, you don't have liquidity. You understand? So the instruments must come, and then people will start now wanting to sell what they have so that they can buy something else. With 10 companies, there are very few. So we need more companies to come to the market. Maybe the clinic is starting to emerge a bit, but most people are doing a debt. But we would wish also for people to do equities and other instruments I mentioned earlier.
How about generally? How about the politics around capital markets? Did you at some point collide where government could not understand? I mean policymakers.
Yeah, policy-wise, well, the government is the one that came up with the idea, first of all.
But when it
So
came
it's
to
there's implementation. It's not the government which implements. So you have other implementers. Of course, the docket is the Ministry of Finance.
On the side of government, you were
and yeah, on the government side, I don't think. I mean, not all the time is the same, or everything is rosy. I mean, if I could have 50 companies to list from private sector, I would be happy. You understand? But that's not the point. They come when they come.
Why is it that there's no government?
There is government
entity.
Actually. No, there were government. There are government. Yeah, there are government entities.
Apart from the bonds.
No, they do companies. Actually, we've had
which one is that?
But Bradira, Bank of Kigali was partially government.
Oh, okay.
See, so those companies were coming. So there are a few that came. If they are more, the better. But I really want more private sector policies that are oriented to even compel private sector companies to come to the market. Public utility companies. Why don't you see banks coming to the market? Some countries do it. Banks, insurance companies, transport, mining companies.
Utilities.
We keep making noise. We don't have money for mining. Why don't we create companies to invest in mining? In Rwanda and elsewhere the country is going. We have now good alliances. Angola, Mozambique, Central Africa, they have minerals. Why don't we create companies, raise funding in the market, and then maybe venture there? So we need creatives or people who are bold enough. We need champions, But the champions we have in these different sectors, they do not know much about raising money. You understand? Or they are not incentivized enough sometimes to join the markets. We've seen good examples in Jamaica. Where they have some incentives for companies. You come with SMEs, if you join the market, the stock market, you are not paying taxes.
There is a popular,
for 10 years maybe, or you pay 50%. But the money you save helps you. So some incentives there can be fiscal, others can be other incentives that help you or support you through whatever you are doing. But something needs to be done, and that's something that needs to be done. I can only personally or industry-wise, like the stock exchange, capital market authority, you can only move one needle or two. You can't move the whole thing.
There is a popular statement that came from the 2015 conference where the president was saying he prefers capital markets to aid.
He's right.
And the issue was that, this fixes debt and dependence and raises liquidity and capital and investments.
Yeah, I would add something else. Yeah, I don't know. I don't want to print what you're going to ask. I will add something else. It fosters independence. That's number one. It brings in the liquidity and so on, what you are saying. But one most important to me, on both sides of the coin, there's a supply side and the demand side. The rest is intermediation and policies. But now, the one very, very key component, it democratizes ownership and wealth creation for countries. I would I would be very, very happy in the next 15 years because I will not be there where I am sitting. Definitely. I mean, the next 15 years cannot claim to do another 15 years at the stock exchange.
I'll be having
Definitely
an interview with someone else.
Yes, no. I mean, the companies grow and the leaders change and all that. But what I'm saying, I'll be somewhere around probably. But the point is, I'm trying to say, the dream I would wish to see in the next 15 years, I would wish to see the market cap of Rwanda bigger than GDP. And it's possible. You know why?
You have factors?
The factors are there, but I will not enumerate all of them. But what I was trying to say, the biggest component here is the buying of the wananchi, the people. of Rwanda, or our neighbors or friends of Rwanda, and the diaspora of
Putting
Rwanda
money in their pockets
investing up
so
to
that
even
they
the
can
Formula
create
One car.
wealth.
You understand? That's the kind of gym we should be having, or investing in this infrastructure, stadiums we are building. But we put infrastructure bonds, diaspora bonds. We do work on things that are revolutionizing our market and our economy in general for the country.
And allowing
This
every
market is not
citizen to
mine,
participate.
is a country issue. So now if we have the buy-in like that, and we create wealth for all. If I'm a banker, if I'm a client of a bank, yeah, I'm charged 18% on my loan. My deposit is what? The deposit rate is what? The interbank rate is what? 6 point something, 7%. You understand? So the lending rate and the borrowing rate, there's no, but the bank makes money. But if the bank is not listed, for example, it's an example I'm giving you. Insurance company, everything with every aspect of life, if it is partially owned also by the general public, that's my dream. If anyone who needs money can get the money even from the capital market or wherever, but the notion of creating an equity culture, we remove all the debts we have.
So that
and it's
actually
possible.
plays a
And
big role in sovereignty.
It promotes inclusiveness, first of all. People feel belonging. When they see a building like this, oh, it's not they are building. No, they will feel our building.
Our building.
You understand? If you have even if one unit, you have it. Real estate investment trust. These things promote ownership of buildings by people, not just one individual who's choking with bank loans. Bank loans are good, but if you struggle alone, he will kill you. So now that's inclusiveness, the democratization of ownership and wealth creation.
And from a state point of view, it also provides sovereignty.
In the end, imagine 14 million Rwandese we have, yeah, each one contributing maybe $100. How much is that? Or $1,000 from the diaspora. The money, the potential is enormous. You understand? So what it means is that we're going to be all together, hopefully, and build together and grow the country and the company.
Is the rest of the world? Yes.
This gentleman wants to speak to you.
Why are you interrupting the interview? Give me 1 minute, we're done.
Ichi?
So, if you see the attitude of the West, the Western world, towards Africa, you are looking for debts, you're looking for donations. I mean, I was talking about sovereignty. How does the capital market secure these developing countries from dependence?
It's very simple. I mean, they use you use Chinese or Russian money or Iraqi money to buy U.S. government bonds, and they come use that money, the same money, to buy bombs, and they come and bomb you easily. You understand? So you raise money from people, and you cannot even be able to go and bomb them with the same money they raise from you. You understand? So now that kind of independence, if you develop your markets like that, you raise money, you understand, for your own businesses, you invest in whatever you want to invest in. You understand? But if your people support the equity culture, the debt is okay, but you have to mix better than we do today. You see a lot of chamunara. That happens all the time. I mean, there's something wrong somewhere. If there was more equity, the same way they have, like in Jamaica, they have a serious equity culture. Countries are the same as Rwanda, right? So now it's 3 million people, GDP $23 billion, per capita income $8,000, 3 million people around there. But at least 40% they are in the market, but they have 140 companies listed on their market. Mainly from the market, the junior market, that's how they call it. Junior market is a market segment for startups and small medium enterprises. That one actually has made miracles and millionaires in that country, without even a sweat. So that means they are owning their economy, and democratically, most of the time. I would rather have a bunch of millionaires than having a few billionaires. The Dangotes are good, right? But the Dangote alone, I would like to have minimes of Dangotes with small millions of dollars or Rwanda francs, but which are at the base of developing and investing in our own economies. And the capital markets can be able to do
On
that.
the 19th, you're celebrating 15 years. It's going to be a big party.
Yeah.
Let's, in 1 minute or less, summarize the numbers. 15, again, for those who missed or who didn't follow. Current capitalization.
Our capitalization is about 4.6 billion dollars, but divided between equities and bonds, and the fixed income. Equities is around 3.3 billion, and the fixed income 1.3 billion dollars. I'm talking about that. If I would say the total funds raised so far is 1.8 billion almost dollars again, or around 13% of GDP. But the total money that has circulated between raised and traded in the market are revolving around $20 billion. That's 142% of GDP of activity that has happened. So
And the total number of bonds
and
issued?
we have about actually have 149 instruments that have been issued in the market since 2011, since inception. Of course, we will complete the 150 cycle. Next week there will be a bond issue listed, a new bond listed in the market. So of that we have of course a 10 companies are listed, and a bunch of bonds, government and also corporate bonds, including sustainability linked bonds and green bonds listed on the market from private sector companies.
Mr. Thies, thank you so much for the time.
Thank you.
Thank you for the city tour, for the office tour,
Sure.
for the insightful conversation. And we are here and we're going to enjoy the coffee as we take a break.
All right. Thank you.
Thank you so much.
Sure, thanks.
And I wish you good luck.
All right. Thank you very much.
Yes.